Happy Thursday out there, Team 42. It's your skipper here, Darius to present our macro minute for Thursday, December 5th, 2024. Congratulations to all my crypto friends out there for Bitcoin 100,000. You know, yours truly called that maybe about a month ago. So it's probably not much of a call. A month ago, I think we were at like 85,000. But we've been extremely and incredibly bullish, arguably the most bullish people on Wall Street for the right reasons for over a year now, since our pivot in early November of last year. And, we're really grateful for that. We have a lot of clients who've made a tremendous amount of money. We've gotten a lot closer to retiring on time and comfortably. We got a lot of buy-side PMs who are going to make a crap ton of money in bonus season in a couple of months. And so we're really fortunate about that. But let's keep it moving here. As always, we'll start with our executive summary from today's leadoff morning note. Today's key macro question is, does Jay still want a soft landing? Our answers are yes, at least according to his latest commentary. Fed Chair Jay Powell signaled what he needed to signal to keep the good times rolling in asset markets via committing to further policy rate reductions towards the Fed's likely too low estimate of neutral. That extends the monetary policy space required for global liquidity and asset markets to continue trending higher well into 2025. Coupled with the likely $700 to $800 billion of Treasury Journal account spin down and a likely end to fake QT in the first few months of next year, we continue to think risk assets are likely to experience considerable upside through at least late March and early April of next year, or late March or early April of next year. Also supportive of the continuation of the current risk-on market regime is President Trump's pick of former SEC Commissioner Paul Atkins to replace Gary Gensler. Recall that Mr. Atkins served during the George W. Bush administration. Atkins' critics deride him for his ultra-lax approach to financial regulation, actions they believe led to the global financial crisis. While significant deregulation of the financial sector is unlikely to end well, much like the debt finance housing bubble he contributed to before it, it is resoundingly bullish from today's starting point. Enjoy the ride up and be ready to respond to our KISS and Dr. Mo's signals when it is time to exit before the next great collapse that proponents of zero regulation will most assuredly blame on everyone other than themselves. Transitioning to our 42 macro dashboard here. As always, a wrap up with a question from our community. This one's regarding our KISS crypto stocks and KISS signals. It says, hey, looking for some feedback from the community. I've held MicroStrategy, Coinbase, and Marathon stocks since before I joined and implemented KISS. And I'm debating if I want to trade those positions on the KISS Bitcoin signal. Do you think they're correlated enough for that to go well or not a good idea? Thanks in advance. So the answer to that is I can certainly confirm that on MicroStrategy. I'm not familiar with Coinbase and Marathon stock, but you could just run a simple regression analysis and determine the beta of those stocks relative to Bitcoin. And so I would use our Bitcoin signal from discretionary risk management overlay, which we update 6 days a week here for our 42 macro clients to manage the risk of those positions. Now you have to size those positions appropriately, right? Like MicroStrategy, for instance, has a beta of like 1.5 to 2 relative to Bitcoin. So, if you're going to, have a, let's say it's a beta of 2, if you're going to have $100 position in Bitcoin, you need to divide that by 2, divided by the beta in order to get the appropriate position size to have the same exact beta adjusted exposure as a Bitcoin position. So, but so be aware of that. So again, I can't confirm on Coinbase or Marathon. You got to do the math on your own. It's obviously very easy. There's never been a wider plethora of free tools to do stuff like this on the internet. So if you're going to be investing at all with any serious amount of money, it behooves you to take advantage of all those tools on the internet. And then one final thing I'll say before we wrap up is if you look at our back test for crypto specifically, and obviously our Dr. Mo back test, Dr. Mo works really good across every asset class, as you can see here in our back test: U.S. equities, global equities, U.S. bonds, global bonds, IG credit, high yield credit, dollar, gold, specifically as it relates to Bitcoin here. So what Dr. Mo does, and for those who may be unfamiliar, our discretionary risk management overlay is a very simple tool. I mean, it's an incredibly simple tool that helps investors stay on the right side of market risk with very simple recommendations. You don't need it to know anything else that I say if you're going to be implementing our risk management overlay vis-a-vis KISS or Dr. Mo. All you need to do is look at the proper trade recommendation and do whatever the proper trade recommendation is recommending for the particular exposure that you're investing in. So obviously, Dr. Mo has signals for all the U.S. equity sectors, all of the major U.S. equity factors, all of the major global equity markets, all of the sectors within the fixed income asset class, and then all the different macro exposures of which we're talking currencies, commodities, and crypto. So for right now, Dr. Mo is recommending a long max position in Bitcoin. So if you are a crypto investor and you want it to be long Bitcoin or Marathon or Coinbase or MicroStrategy, you would be like, okay, I need to be long max position in those particular things right now. And guess what? The simplicity, the deep simplicity of Dr. Mo is that you don't have to do anything different until Dr. Mo changes the proper trade recommendation. Like the long max position signal in Bitcoin can extend for the next 6 months. And you literally don't have to do anything. You don't have to hear anything else I say. You don't have to hear anything else anybody else says. You don't have to hear anything about liquidity, anything about growth, anything about Trump's policy, anything about financial deregulation. All you need to do is open the document and see if the proper trade recommendation for Bitcoin changed from long max position. And when it does change from long max position, let's say it goes to long half position, you cut the position in half. Let's say it went to a no position because we're heading into a bear market. Then you just sell the position and wait patiently until Dr. Mo gets you back invested with a long half or long max position signal. It's literally that easy. I'm serious. We created a Fisher Price risk management overlay that's backed by some of the best institutional proven quantitative techniques that we've learned from our interactions with all the world's best investors across the global buy side, and we're making it available to investors on Main Street because it's very important to me to give back to the real world and not just confine what's in my brain and my skill set to the top institutions on global Wall Street. That's why we started 42 Macro. That's the ethos of our firm. I want to completely narrow to zero the information asymmetry from the clients I'm about to meet with this afternoon who manage, over $1 trillion in assets. You can narrow down the list to guys who are running, a couple $100,000 in their retirement account. To me, the need to generate superior risk-adjusted returns is the exact same for the person on Main Street as it is for the CIO of a major Wall Street financial institution. And that's why we do what we do here at 42 Macro. So if you need simple, actionable, accurate signals to risk manage your portfolio as quickly as possible without a lot of commitment from a digestion perspective, then Dr. Mo, KISS and Dr. Mo are the signals for you. And going back to where I started this conversation before I wrap up, the reason we have so many thousands of customers following our KISS and Dr. Mo signals is because they work. They work really, really well. Specifically with respect to Bitcoin, throughout the lifetime of this back test, the cumulative performance of Bitcoin by the various proper trade recommendations just shows you exactly the dispersion of cumulative performance across the different proper trade recommendations shows you the power of the signal. So for example, when Dr. Mo has been recommending a long max position in Bitcoin, Bitcoin has returned 1,923%. When Dr. Mo has recommended a long half position in Bitcoin, Bitcoin has returned 368%. When Dr. Mo has recommended a no position in Bitcoin, Dr. Mo has recommended when Dr. Mo has recommended a no position in Bitcoin, Bitcoin has returned 122%. There are no short half positions in any crypto or equity exposures, based on our institutional finding of how asset markets trade. That's typically when you get the V bottoms. So you don't want to be short anything in a V bottom. And then when you're in a short max position, which is when Dr. Mo is heading into a crash, then Bitcoin has returned minus 419%. So when you look at this across aggregate the long positions and you aggregate the short positions, when Dr. Mo has been recommending a long max position in Bitcoin, Bitcoin has returned 2,291%. When Dr. Mo has been recommending a short position in Bitcoin, Bitcoin has returned minus 419%. So 115% of the cumulative return in the Bitcoin asset class throughout the duration of this backtest has come when Dr. Mo has signaled a long position. So more than the available return you could possibly get from just buying and hold for hodling Bitcoin. If you hodl Bitcoin, you would make less money than you would if you were following Dr. Mo. And that's the key takeaway. It's the same thing for Ethereum. 169% of the cumulative performance has come from when Dr. Mo is recommending a long position in Ethereum. So again, you would have made 1.7 times the amount of money you could have possibly made as a hodler of Ethereum the entire time. And so, you tell me what's better, hodling through significant drawdowns or managing risk heading into bear markets and buying the low back. A lot of folks want you to hodl through drawdowns. I think that's stupid. I think it's a ridiculous way to invest. I think there is an opportunity cost to having a significant chunk of your capital losing money week after week, month after month, year after year in these multi-year crypto bear markets. You could reallocate that money to, I don't know, a money market fund and make 5% instead of losing 75%. And then when Dr. Mo says get back long crypto, you take all that money that you put somewhere else that was making money throughout that entire time, and you pop it back into the crypto market and hodl for the bull markets only. We hodl for bull markets only here at 42 Macro. And if that's what you need to get out of your macro risk manager, we're the research provider for you. And if you think losing money for multiple quarters and years at a time is smart, then our research is too smart for you. So we'll wrap it up there. Darius Dell here presenting our macro minute for Thursday, December 5th, 2024. Best of luck out there. We'll catch back here tomorrow. Cheers. And well, by the way, we got our macro scouting report out tomorrow. So for those of you who like to think critically about where we're headed in the growth cycle, where we're headed in the inflation cycle, where is liquidity headed, where are corporate profits headed, where is positioning and how all this is going to tie into the potential evolution of the market regime over various time horizons. That's the kind of research that we do for our institutional clients and any retail client who's, smart enough, sophisticated enough, or just generally curious enough to want to know that information. So that report, our monthly macro scouting report, will be out tomorrow afternoon exclusively for 42 Macro clients. So we'll wrap it up there. Darius Dell here. Everyone have a wonderful day and celebrate your crypto gains. I'm really happy for everyone out there in the crypto community. It's a great day. It's a great day. Cheers.